Hey everyone, and welcome back to the weekly chart wrap by True Options Masters. I'm your managing editor, Mike Merson, and like we do every week, we're going to look through all the charts we looked at in our chart of the day sections and see how they panned out. Sometimes I'm right, sometimes I'm wrong, sometimes I'm really wrong, and sometimes I'm really right. Let me not touch the mic while I'm recording this. Let's just jump right in. It's a very exciting time in the markets. CPI print just came in, and there's a lot to talk about, so I don't want to delay. First thing I want to look at, the Euro USD chart. We've looked at this quite a bit last few weeks, and for good reason. We're seeing this breakdown play out, but I'm starting to feel like this trade's over. We're getting a lot of buying interest on the Euro, on the weekly chart, by the way, which is a fairly long-term indicator that you want to be looking at. Really strong buying interest at these levels. It keeps trying to push down to this major support resistance zone, and we keep getting these long wicks with green candles to follow. So we got most of the breakdown out of this head and shoulders. So it feels to me like it's time to probably shut up about this chart and move on. But this is a great showcase of a long-term macro chart pattern playing out for factors that aren't necessarily technical. It's almost sometimes like, it sounds crazy, but the technicals can preclude major macro events. So the euro was going to weaken against the dollar over the past few months because, well, I mean, the dollar is still seen as the world's store of value, despite 6.8% inflation, which we are going to get to. Eagle-eyed viewers are probably looking at my second tab right there. The dollar is still going to perform a little bit stronger than the euro here, but I think we're now in this period of like consolidation. I don't see a dramatic fall from here past the 1.1 level. If we do break that, we'll probably see some downside, but there's just so much action here that we can look at where people will definitely see some interest to long euro. So yeah, this trade is probably done. So that means I could stop screaming about it to you. But yeah, just keep this in your back pocket. Head and shoulders patterns, they can emerge. And when they break down, they tend to break down super, super hard. So I'm glad I was able to put this one on your radar. If you made money on this trade, be sure to let us know. TrueOptions@banyanhill.com is our email. And I'll just take this moment to say, hey, if you like this video so far, subscribe to the YouTube channel, give it a like, hit that notification bell, all those things you love to do, interacting with YouTube videos on the internet with me, Mike Merson, your managing editor, your favorite chartist that you're watching at this given moment. Let's move right along before I embarrass myself further. Let's talk about XLE. So energy stocks. Mr. Chad Shoup, in his monthly market outlook for December of 2021, this final month of 2021, said you want to be long energy stocks. And I want to point out what happened the last time Chad made a call like that. I believe it was either October or September, where he made his first calls to get long energy stocks, or it might have actually been all the way back in July. He was early, no doubt. But that resulted in essentially 22% upside in energy stocks across the board. And now what are we saying? Well, we are seeing energy stocks continue to trade well, hang on to this support that it broke through after Chad made his energy stock call. We came back, we retested it, we left a long wick behind here, but it was a nice bullish green candle that we caught on the 20-week EMA. And now we are bouncing off the support yet again. And I think energy stocks have a lot of room to run. So this also is a bit of an inflation trade, right? So energy prices very, very drastically affected by inflation, as we've all noticed at the pump this year. Natural gas prices went crazy this year. So the energy sector as a whole is a very, very good place to put your money, at least seemingly for the time being. I think you want to be bullish energy here. I'm personally trading call options on a few energy stocks some of the ones that Chad, sorry, my dog is making noises. I hope that's not coming through. My dog is very cute and he deserves to make those noises. Yeah, you want to be long energy stocks. That's the takeaway from this chart. We have a really nice, I mean, you can see we're retesting this high from back in June, and we're bouncing off it yet again. Oil prices are probably going higher again. Maybe gas will come in. I know the Biden administration is watching that very closely and wants to do something about it. We'll see if they can. I hope they can, because I'm feeling it too. That's why I bought a hybrid this year. Pro tip, if you're able to buy a car at all this year. Anyway, let's move right along to crypto land. So this chart isn't looking as nice as when I first showed it to you earlier this week. But the breakout is not to be ignored. This is a significant macro breakout. I'm going to even bring it to the 2-week chart here of Ethereum against Bitcoin. Now, this is the price of Ethereum against Bitcoin. What this shows is that the price of Ethereum nominally is 0.083 and so on and so forth of a Bitcoin. And that equates around this time to something like $4,100 to Bitcoin's $47-ish thousand. So what does this mean? If we're breaking out of such a long-term downtrend line, and if this next candle confirms that breakout, which at the moment it's kind of not, it's actually trading off of the May 2018 high resistance, then things could look really, really good for Ethereum and altcoins for the final stretch of this bull market, no matter how long it lasts. I personally, if you've been watching Crypto Claptrap, you know that I am a strong proponent of Ethereum. And I think it will take the #1 spot in the crypto markets inevitably. Whether it happens next year, 2025, I think it's an inevitability. So the way to get positioned to that is to own Ethereum, chiefly, but also to own some of the stronger altcoins out there. I mean, I'll just throw a few out. I think Aave, Link, Sushi are all at, pretty solid prices here. And this is the kind of thing you want to be invested in with most of your portfolio, in your crypto portfolio. Bitcoin has a place in a crypto portfolio, don't get me wrong. I think Bitcoin will live longer than probably all of us. But if you are looking for a growth portfolio and not just an inflation protection portfolio, then you need to be in these altcoins. And this breakout is significant. This divergence does spark concern. So we have, missed a little bit. Higher highs on the levels, lower highs in the RSI. But the MACD is looking a little bit more bullish. This blue signal line is bouncing off of the longer term orange line. And that looks pretty good. So it's a mixed bag. I'm not going to say it's not a mixed bag, but I do think it's a mixed bag in the short term. Over the long term, it is hard to ignore this breakout. I think it's the most important chart in crypto, and I think we're going to see a significant sea change in where the focus in crypto is over the next several years. Don't forget, this is a weekly chart. This is actually a 2-week chart. So this is a very, very long-term look. This chart goes all the way back to 2017. So keep that in mind, position appropriately. Now, let's look at stonks. Sorry, I couldn't help myself. Here's QQQ. Well, let's bring this down to a daily. So it's we can see it a little more clearly. QQQ's been in this really, really just textbook, beautiful uptrend channel since all the way back in September 2020. We bounced off this level, and that's really when the channel really started to form in February of this year when we had that next sell-off. We've been trying to get past this blue line ever since, escaped it once, sold back in, escaped it twice, sold back in with a little more fervor, and now here we are just sort of chopping. QQQ is probably going to make another run at this resistance at 410. That's what I anticipate, potentially into the end of the year. Just looking at the daily chart, I think it's certainly possible. We'll see new highs in QQQ before the end of the year. That's if no scary headline news comes out about Delta. Wow. There's so many variants. I forgot which one we're on. Omicron. But the thing is, with inflation, and we're going to get to the CPI chart in a second, is 6.8% year over year is no joke. I mean, if someone told you that 5 years ago, you would have said they were crazy, because the Fed was struggling to get over 2% inflation, 2 or 3%. And it wanted higher inflation, and now it's getting a little bit too much of it. Savings accounts are money losers. Bonds, by and large, are money losers. And it's a mixed situation, because obviously you want to protect your capital, and you have to do that by investing. But it's encouraging investment at such a rapid and aggressive pace that things can't go up forever. We've been in the longest bull market of all time. And I'm not saying I'm bearish. Trust me, I'm a macro bullish, at least for the next few years. And I think the Fed will find a way to kick this can down the road quite a lot further. And we will see things rally beyond our imagination in a up-only sort of fashion. But eventually the system is going to break. And I think we're in the first inning of seeing that system break. So, in my opinion, you want to own quality businesses. You want to own quality alternative assets. And you definitely don't want to be parking your money in a savings account. Options trading is a good option. Pun intended. But it should be a small part of your portfolio. We do call ourselves true options masters here. But when it comes to option trading, especially right now, if you have the skills to trade options consistently and make money doing it consistently, then you ought to do that. But you definitely shouldn't park your portfolio in an option trade. That would be foolish. Look at some of Chad Shoop's strategies for generating income. If you have a sizable portfolio and sorry, let me stop my phone from buzzing on the desk. You should look into those sorts of things. Chad has amazing strategies for that. And check out his YouTube channel as well, for that matter. We'll try to put a link up for that. And yeah, that's just some really sort of baseline advice for the economic environment that we're seeing right now. Invest. Keep enough money in your savings account to pay your bills. Use potentially some crypto cash alternatives that earn yield to keep a larger portion of your savings, your parachute savings, for when something goes wrong, you lose your job, etc. That's what I do. But anyway, let's move on to the star of the show here today. It's the CPI. And we'll take a look at it over the past year. There's really not much more to say that hasn't already been said. The CPI is up 8% from last month. Or excuse me, not 8%. Oh, what would that be like? No, 0.8% from last month, 6.8% year over year. Inflation's running hot. Jerome Powell said a couple weeks ago, we need to abandon the term transitory, which really spooked the markets because he kind of introduced the term transitory a few months back, you might remember. Inflation's running hot. You need to adjust. And I think what's particularly concerning about this is that God, 90% of everyday people don't invest at all. Like, most older folks keep their money in savings accounts because for a long time you could do that, and you could actually get a decent return in a savings account, but those days are gone. So a lot of people are going to get left behind, and it's also going to encourage a lot of reckless investment. So you just really want to be selective with what you're investing in, and make sure that your money is returning what it ought to be. Hopefully the Fed finds a way to rein this in. I don't see how they do that without raising interest rates and just scaring the crap out of the stock market. I mean, no one's going to pull a Paul Volcker when he raised rates to, like 10%, 20% back in the 80s, and just devastated the market for several years, but it was ultimately healthy for the economy. that can's been kicked too far down the road this time around. I do not see the Fed acting this bold. If anything, I see low interest rates, if not near zero interest rates, for the foreseeable future. Because, I mean, heck, the last interest rate cycle topped out at 2.25%. And I remember back in, was it December 2018, Fed raised rates again when everyone was thinking they would stop. And that caused markets to fall something like 10, 20% during the holidays. It was devastating. And then they started cutting rates. So if we can't get past 2.25% without markets freaking out, and we just, not completed, we're just beginning to wind back the most aggressive QE campaign of all time, or at least that I'm aware of. I mean, what do you think what happens when rates go to 1% this time? Maybe a bloodbath. So you really got to look for ways to protect yourself. I know this is a bit more of a somber mood than I usually try to go for in my chart wrap videos, but this is serious business. Inflation is here. It is probably not going away. It will probably be very, very persistent, and we all need to adapt. So, in summary, the money is getting weird. You want to be in stocks, quality cryptocurrencies. You want to explore ways for you to earn yield on dollar alternatives in crypto. I won't cite any in specifically, but a quick Google search will tell you what you can do there. And you just want to be safe out there. So, next week, I'll try to keep it a little lighter. We'll find some fun charts, some fun individual equities. It's just this macro picture is so important to understand, both what's happening in crypto and what's happening in equities and the dollar and all these things, to make sure that you are progressing your financial standing in a manner that suits your lifestyle. So that's it. I am going to wrap it up. Thank you for watching. As always, this is Mike Merson from True Options Masters signing off. I hope you have an amazing weekend. Bye now.